Welcome, ladies and gentlemen. Delighted to continue with our webinar series, Outlook Business Masterspeak. Our first webinar was with K. Ganesh, a serial entrepreneur who talked about strategies for startups as we emerge out of the lockdown. Today, we have with us Rajiv Chawla, Chairman, I Am SME of India. I Am SME of India stands for Integrated Association of Micro, Small, and Medium Enterprises of India, India's largest SME network. Thank you, Rajiv, for joining us today. Rajiv is also the founder and chairman of Jairaj Group of Industries engaged in manufacturing of auto components, electrical, white goods, molded and molded products. Before I pose questions to Rajiv, I would like to thank our presenting partners, Hyperlink Infosystems, and co-sponsor RR Solutions. Rajiv, first off, can you give us a glimpse of how the SME sector has been affected by the current slowdown?
These are unprecedented times and something which we've never thought of ever. No one except some of the science fiction movies could imagine this kind of a situation that the world is facing today. So the COVID situation is an unprecedented situation. For the first time in our lives, we've seen almost more than 2 months of lockdown, complete business, complete economy coming to a standstill. Millions of people walking back home in very difficult conditions, some by foot, some by train, and all this culminating to a situation when millions are losing jobs. People who've invested in the recent past are facing huge stress and the challenge in meeting with some of those debts in times to come. So this is a very uncertain situation. And in a situation like this, when the government of India also asked all entrepreneurs to pay salaries and wages even for the lockdown period, so that even further added to the stress of the MSME sector. So I believe that with zero business in the last 2 months, with a huge stress and burden of the salaries that was imposed upon the MSMEs, and with an uncertain future that lies ahead, this is what I call a perfect storm.
Sure. And how do we survive this perfect storm?
There are a couple of things that I would like to mention. One is that it's not only about survival for 1 or 2 months. I'll try to look at what would happen on 31st of March, 2021. So let us say this financial year. If I take a typical example of a very good, strong SME that would do a business of, let us say, 50 crore and would make a profit of almost 2 crore, an SME which would be, in the best of the books of every bank, and banks would lend them money and they would grow aggressively and invest. So this kind of a blue-eyed SME till March 2020, this year would see a downturn because the revenues would be at best half of what they achieved last year. So this 50 crore SME has to come down to about 25, 30 crore, depending upon which sector. But even if the sector is great, hardly it would achieve a turnover of 25 or 30 crore. And with a depreciation element of full 12 months, all fixed costs of 12 months, salaries and wages for 12 months, and bank interest burden for 12 months, this SME would see a reg of almost 4 crore by the end of 31st of March. And this is what would change the rating of this SME. And next year, the same SME, which could get access to all the bank funds at the best rate, next year could have a different credit rating. And how would the bank then treat this SME? So it's not only about immediate survival. It is also about carrying one's burdens through this storm and looking at a better future ahead. So it's a challenging situation. I believe that till yesterday, SMEs who would not get loans would feel deprived, and they would always complain that the banks are not treating them well. I believe they are the luckiest today because they don't carry a debt burden, if that is the situation. On the other hand, SMEs which had access to bank funds which were growing, progressing, expanding, investing. Imagine the situation of an entrepreneur who would have borrowed, let us say, some bank funds 6 months back and opened a restaurant or a pub or a brewery or travel, tourism. So those are the sectors which are which have gone for a six for a long, long time. So I believe, depending upon where and which sector an entrepreneur is situated, one, also depending upon his or her fixed cost situation, that is the debt that they need to carry at this situation. Depending upon these two things, their survival or their future, that would come up in front of them. And therefore, it is very important for every entrepreneur to assess immediate cash flow situation, the future credit scenario, the future fund flow situation through the 2021, and then of course beyond. There are some businesses who would revive very fast. In fact, there are some businesses who could be making much more money than ever before. For example, the health sector. Maybe this country today needs budget equivalent to the defense budget for the health sector. And therefore, entrepreneurs in the health sector, food processing, agriculture, some of these areas are really, going to be, it would outpace the normal growth. But on the other hand, you look at the gems and jewelry sector, you look at the garment sector, if you look at the automobile of the higher end sector, a lot of luxuries. All those sectors would take a much, much longer time. So depending upon which sector, I think survival depends upon how a person is placed in this storm, and then if one can find a way out.
Rajiv, last week we had a webinar on strategies for startups where we talked about how companies are pivoting as a way to survive this disruption. Does such an option really exist at all for the SME sector? And do you have any good examples of companies or entrepreneurs hustling to make such a thing happen?
In fact, I'll give you a very interesting situation. Imagine a cricket match, two teams playing. In the first inning, there's a team that scores 500 runs and the other scores lesser. Now, between the first inning and the second inning, there is a rain and the wicket gets wet and conditions change. So the second inning now begins. And when the second innings begin, it is no guarantee that the team that scored 500 in the first inning would also do better in this inning. In fact, bowling conditions have changed, batting conditions have changed. This is the second inning. This is the restart, or should I say the reboot button for the world of businesses. And therefore, while in the past, before COVID situation, or should I say the first inning gave us two great things: experience and resources. Some of us could manage some capital, we have some resources, some factories, some machines, some infrastructure. But then these two things are not all that are required for the second inning. For the second inning, there are two different things, two more elements that are required. One element is technology and the new skills, and that is what these youngsters have. And second is innovation. So if people who did great in the first innings, if they are not looking at these two elements, they are out of the circuit. And therefore, these young startups, they have to understand that they carry these two elements in them. They have technology, skill, they have innovative ideas. However, they have to integrate with the experiences and resources of others. So they can't be flipping from one project to another. And because when I look at many of these startups, I find that it is only 1 out of 1,000 that can actually make it really, really big. And gone is the time when people would keep pumping business money in loss-making businesses only for its outreach and the future valuation. So most of these startup companies, they would run continuously on cash losses in a bid to make money in the market and the valuations later on. I think that scenario also would change. So it has to be about bootstrapping every business. It has to be that every business has to break even. There is no more free flowing cash traveling around the world. There's no more valuation that I'm looking at 2 months from now or 3 months from now. The markets themselves are very, very different. So I come from a world where 1 plus 1 is 2. And so it's not that every SME would go to the stock exchange and look at the large valuation. So while your call is great, startups have excellent dreams, great ideas, great skills. I believe in this time, they also have to survive and they have to keep their ideas afloat. And they have to ensure that whatever ideas they have today, they take concrete shape and find roots within the next few months, because things are going to change much faster than they ever did before.
Coming back to the woes of the SME sector, a survey done by an SME Chamber of Commerce shows that 69% of the SMEs said their biggest concern was supply chain issues. How do you see these issues, and when do you see these things getting back to normalcy?
Well, I believe, I don't know how this survey and what exactly was the basis for this kind of a survey. This challenge, of course, is very, very true. But I believe that today, in this scenario, the bigger challenge, there are other bigger challenges. For example, there is one challenge which is of the market, the consumers, whether consumers are actually going to the market and buying, whether one's trade has future. If someone is in travel and tourism or hotel, or so how much time that would take to revive. So that is one challenge. Second is, of course, again, of cash management, the credit management with internal means or further new sourcing that could be required. Logistics, supply chains, and other things, of course, are a challenge. When you talk about immediate post-COVID situation, when let us say an OEM like Bajaj or Maruti or any large automobile company, they want to restart, and many of their supply chain people could be in a red zone or a containment zone, and the supply chains could be choked. So some of these things may have that challenge. Having said this, I believe that all these challenges would be met. They need to be met, and as we move from lockdown 1, 2, 3, 4, and now to lockdown 5, many of these logistic challenges would get removed very, very soon. In fact, there are bigger challenges, including the manpower availability, that would face the sector for revival.
At this point, we'll take a 5-second break and come back to deal with questions related to working capital issues. Moving on to something that has been a pain point for SMEs anyway, which is working capital. The FM has announced a 3 lakh crore emergency working capital facility for businesses, including SMEs. Plus, she also talked about an additional working capital finance of 20% of outstanding credit as of 29th March 2020 in the form of term loans at a concessional rate of interest, which is going to be collateral-free loan with guarantees from the government.
Okay, this cash flow situation is really one of the biggest challenges that I see in immediate future. And there are a few reasons for that. One major reason being that, let us say, typically from 22nd of March, when it was a Janata curfew that was announced. Starting that day, the lockdown and the curfews were getting announced. And finally, on 24th of March, it was lockdown. And that has extended till now. Now, during this period, there have been zero sales. So for the last 2 months, the sales have been nil. And therefore, even if my payment cycle, for example, is 30 or 60 days, there would be no payment coming in June and July. So when I look at immediate, these months, so June and July, and I talk for most of the supply chain SMEs in India. And so their June, July incoming revenue would be nil because the sales in the March and April were nil. Second, there are some accumulated statutory dues. For example, we had to pay income tax returns by 31st of March. and we had to buy some saving plan for the year 2019-20. Then there is GST of March 2020 that was deferred. Then there are bank installments of March, April, and May. Those have been deferred. Bank interests have been deferred. Similarly, ESI, Provident Fund, some of these things need to be paid. Many state electricity boards, they deferred their electricity bills. Now, mind you, all these are deferred. These are not waivers. And for most of these dues that have accumulated in March, April, and May, the last date to pay is 30th of June. And that is really, really worrisome because 2 months of nil business means nil revenue in June and July. All statutory dues accumulated as I just counted for you, including the bank interest and installments, etc. And therefore, to pay these dues by 30th of June is a huge challenge. Therefore, this announcement of 20% emergency loan to MSME sector, it comes in very, very handy because these are collateral-free loans. Existing bankers would give 20% of the outstanding as on 29th of February. Outstanding as on 29th of February, the entrepreneurs would get 20% extra on that. And now there are two important things that I would like to mention. One is that all this amount would actually go in paying the accumulated dues of these 3 months. So if I do a sum total of all that I have to pay till 31st of March, or then April and May, which I have to clear till 30th of June. So when I raise this 20% additional working capital, most of this would go in paying these statutory accumulated dues. This is one. Second thing is, to call this loan a collateral-free loan is actually a misnomer. The reason is that the entrepreneurs have already mortgaged their factories and homes and other assets with the banks when they raise these funds. So, for example, I have already mortgaged my securities with the bank, and I have some outstanding on 29th of February. So when my bank gives me 20% additional, which to call it a collateral-free loan is actually a misnomer. In fact, normally also we go to banks sometimes and request for TODs, the temporary overdraft. So I believe that this 20%, of course it would help. Of course it would help because government is guaranteeing. So banks will not be shy of giving this 20% additional fund. But let me tell you that the banks have always been seen sitting very, very pretty. And in fact, it's very unfair at a time like this. In the lockdown, even a taxi driver was asked to stay at home, not to drive a taxi. Even a rickshaw puller had to stay at home, not go. Even a construction worker, daily wage worker could not make money. All factories, all businesses closed. And the only thing that kept making money is banks, just because the bank interest would keep moving with the time clock. That is very, very unfair. How I wish this entire interest cycle also should have come to a complete halt, at least for the lockdown period. And that would have been very fair for every business. So even in this time, when the banks kept making money, even if those are accrued or accumulated dues, that they would now recover. And then RBI gave huge liquidity into the market. The CRR was reduced. Banks are flush with funds, and with reverse repo rates so low, banks, of course, we are the best market for the banks. So to give a 20% extra loan to an existing customer who's already mortgaged his collateral assets, or should I say his own future with the banks, I think this is the easiest thing for the banks to do. And the government also now supporting this as a guarantee. So I think this is just very, very easy for banks. They'll easily give this 20% now to entrepreneurs. However, entrepreneurs may find it extremely insufficient because this 20% would hardly suffice for 3 months of accrued statutory liabilities that they are. And I don't know how they would restart their businesses actually in June and July, even if they get orders in the future.
So, what you're saying is net net, it's not going to help too much because it's not sufficient to reset. But my question to you is this: why do you even say it's an easy way out for banks? Because given the stress in the sector, and if you are suggesting that a lot of companies are already pledged to the brim, a lot of them may not be credit worthy anyway. So, any money that is being put on the table is a blessing that is being handed out.
Okay, there is, of course, I admit that there is support in what the government is doing. Ultimately, there is this 20% additional liquidity is coming to entrepreneurs. But let me tell you a very typical situation. Suppose I have an outstanding of, let us say, 2 crore or 3 crore on 29th of February. Now, this fund I raised 1 or 2 years back, and part of it was term loan, part of it was working capital. Term loan, as it is, I have been paying over a period of time. So my outstanding has been regularly. I took a, let's say, term loan of 2 crore, and that is now slowly coming down. And today the outstanding could be 1.5 crore. And the CC limit, as it is, all the receivable stocks are hypothecated, and I keep paying interest on my working capital. So it is not that the banks are taking additional risk. Already, I have repaid part of my borrowing, and therefore my collateral security. In any case, banks would take a risk of only up to 70% on a collateral security. So if on a property of 1 crore, bank gave me 70 lakh, on that 70 lakh, I have paid through my EMIs, regular term loans. The today's outstanding is 50 lakh. And now on that 50 lakh, if banks again give me 20% more, that is 10 lakh rupees more, the total outstanding comes to 60. And my collateral, in any case, was 1 crore at that time. So I believe that it's almost a zero risk proposition for banks. Banks already have collaterals. They already have all the receivables and stocks as securities. And government additionally is giving some guarantee. So banks are, I think, they have zero risk in giving at least these 20%. Let me also remind you, banks are giving this 20% only to the regular accounts, not to the NPAs or stressed accounts. So all the regular accounts, so that they keep afloat, banks would be giving this 20% extra. They already have the collateral. Government is further guaranteeing this kind of a situation. So I believe it is the easiest things for banks to do, and banks should do it. However, the call now is that what if someone needs more? Will the banks then come forward? Will they, demand some additional collateral, or would they be going in for, because there are some recent stories that I'm hearing that some of the banks are not renewing the loans, and especially the private sector banks, they are trying to reduce the debt with their entrepreneurs. Those in cases where renewals were due. So markets have different stories and experiences, because it is now that the banks have to actually take a call whether they would be funding a future capex, whether they would be giving something extra other than a bit more than 20%, what the government is guaranteing. So all that would depend upon a lot of assessments, a lot of ratings. We need a new rating mechanism, to in future for the entrepreneurs who have been doing well, and whether they trade have a future, and also whether a particular business model or a particular entrepreneur has a plan for future, or in such an entrepreneur whether is also engaging new skills, new technologies, innovative areas to look ahead. And therefore, assessments, credit rating, credit assessments, requirement assessments by the banks for these SMEs in future also will not be easy, because there is a bit of uncertainty. And therefore, as I said in the beginning, this is an unprecedented situation. And therefore, this situation demands unprecedented measures, both by the government and the bankers. And if the government also today thinks of itself as an investor, if the government today invests in me, in entrepreneurs, in MSME, we would be paying the same government back many, many more times through GST, through taxes, through other means employment. But if the sector itself, goes down, then how many people will pay income tax this year, for example? If as I just told you, when entrepreneurs, if I look at my 2021 projection, I see a net loss in my business also, because the revenues would be only for 6 to 7 months, with costs for almost 12 months. So a good, healthy SME last year would be a negative red SME this year. And therefore, there would be no taxes this year. Maybe it is the only minimum advance tax, the MAT, that sometimes entrepreneurs have to pay. So if 100% MSMEs are in losses, and if they don't pay income tax this year, where would be the government revenue there? And also government is already hit on GST as well. And therefore, I believe that in this unprecedented situation, government has to find ways and means to invest in MSMEs so that these MSMEs can retain their base, they can bring back their people, they continue to give employment, they continue to play a good role in export, and then, of course, on GST for the government and also pay taxes in times to come. Many more times will we pay back the government. It is only that in this time, SMEs are looking at a huge support. Of course, government has given some, but I believe much, much more needs to be done.
I understand your point on collateral-free loans not being too helpful because it only pushes companies further into debt and does not provide real relief. But there is also an equity infusion of 50,000 crore and a subordinated debt of 20,000 crore that has been put on the table. Now, who could really benefit from this? And do you really see the traditional industries taking advantage of this?
Yes. Ma'am, this 50,000 crore mother of funds is a great scheme, a great program of the government. But let me tell you, the beneficiaries of this program will be high-tech MSMEs, startups, and very high potential SMEs that have a huge future, those who can look at future listings, future valuations, because this is the fund that would come to these entrepreneurs as equity. And needless to say that this fund will come as equity only to those entrepreneurs who have a very high potential or high technology, those in maybe pharma sector, maybe health sector, in high technology sector, maybe some of the entrepreneurs would get. But then I don't believe that this is for the traditional MSMEs, the thousands, the millions of manufacturing MSMEs that are in India. So this mother of funds is available for the high-tech, high-potential SMEs and startups. 3 lakh crore is for the existing borrowers, not for those who don't have access to the credit. And then there's another scheme of subordinate debt that the government has brought in. That is for the stressed and the NPAs amongst the MSMEs, those who would need at restructuring and future revival. So these 3 programs remain. But what about those who do not have access to bank credit as on date, those who are still struggling for institutional finance or the formal sector to fund them? I believe that is also a very, very large sector. And let's see what government does for them. Let me also make a mention that on 2nd of November 2018, Honorable Prime Minister launched an SME outreach program. And in this MSME outreach program, he announced 2% interest subsidy for incremental loans which are availed by MSMEs. Unfortunately, that scheme ended in March this year. In fact, we believe that this is the time not only to extend that scheme further, at least for next 2 years, but enhance this 2% subsidy to 4%, because that would be help for those entrepreneurs who would be going afresh to the bank or who would be reinvesting or investing more in capex and future expansion.
So, Rajiv, what's your advice to entrepreneurs today? Anybody whose business is disrupted, somebody who is cash strapped, does not see too much revenue um, coming back this year, how should you deal with this situation? Should they be taking additional debt and keeping the business going, or cut fixed costs hugely to fight another day? What would be your advice?
All right. The first thing entrepreneurs have to understand is that the world of business will never ever be the same again. And past success is no guarantee for future success. Remember these things, and you have to actually restart from where you are. This is one. Second is that do not go in for additional funds, bank loans, just because government is offering or banks could be offering. Uh, Loans have to be repaid. These are not waivers, and these add to future debt and future stress. Let me tell you that every personal guarantee that an entrepreneur signs while availing of a loan from a bank, he is actually mortgaging the future of the next generation also in the family. Therefore, it is extremely important for entrepreneurs to focus on their immediate debts. What are their past debts? Can those debts be cut down? Are there some wasteful stocks, unused machines, unused assets lying in the family? Can those be liquidated now that the markets open up? So that is one very important thing that I would ask every entrepreneur to slim down, reduce the debt burden as much as possible, even at the cost of sometimes losing some money. Uh, I also appeal to Reserve Bank of India and Government of India through your program that many banks are today, even in such a challenging time, very ruthlessly demanding 4 to 5% foreclosure charges, penalty on prepayment. Imagine the situation of an entrepreneur who would be perhaps selling his or her jewelry or gold in the family or some asset at a lesser rate to pay back a loan so as not to become a defaulter. And some of these ruthless banks are demanding prepayment charges, penalties 4 to 5% on their previous loans. So I really want to appeal to the government agencies as well as to the banks that there should be no pre-closure charges, at least in a time like this when some entrepreneurs come back to them and want to reduce their debt. So third very important thing, that raise funds if one sees a future market. Someone gets a new export order. After all, work has to restart, revenue has to come in. And therefore, new loans only for productive work. Not Don't take loan to pay off past debt. You will be getting into a worse debt trap in times to come. Next very important thing, these deferments that the government is also offering, the banks are offering, do not defer high cost loans. Maybe someone is using a credit card. Do not defer that. Defer a home loan maybe, because those are low cost loans, but not high cost loans like personal loans, unsecured loans, credit cards. Third very important thing is that this is the time when technology has to be taken very, very seriously. So irrespective of what one is doing, whether one is running a bakery, whether one is has a kirana shop, or whether one is in manufacturing of essential items or non-essential items, uh, technology is must, and that is where one has to understand. Fourth, new skills are required. Therefore, start hiring people who are smarter than you. Normally, entrepreneurs don't do this, and they would engage low-cost people, or those they can afford properly. This is the time to think out of the box, bring in good talent, because I possibly cannot be an IT expert or technology savvy at this stage. So I need to bring in people who are. Another important thing is to think differently, innovate. That is so important. Maybe a restaurant today can become a food supply, home food supply, or supply food to railways or airlines or buses or schools, door delivery, home delivery. So even a small Kiryana shop should, tie up with Swiggy or some other home delivery companies and start delivering home. So new innovative models, those need to come in. I was discussing with a travel tourism company, and I said that suppose I travel to Mumbai and I have to stay in a hotel there. Now, if how when I get on uh, at the airport, would I go in for Ola or Uber now? Or and I'm not very sure who wrote that earlier and whether it is infected or not. So point is how we can give confidence to a traveler, to a mover, of a complete disinfected cab coming to receive, with proper social distancing measures. So a lot of innovative models, innovative thinking one has to do, whether it is a hotel or restaurant, maybe different cabins need to be made with social distancing. Cinema halls could be drive-in cinemas if possible, while some could be sitting in the car and watching a movie. So I think many new innovative things, those need to be done. And then, of course, is developing markets. And the Prime Minister has talked about an Atmanirbhar Bharat, a self-reliant India. And therefore, it is time to recapture domestic markets. Why should imported goods sell in India? Let's produce the best in the right quality. Let's recapture our domestic markets. And then, of course, go global. So we have to become vocal for the local. And then, of course, local has to become global. And then, lastly, I would say that entrepreneurs have to keep themselves updated. Every day, laws are changing. There are changes in income tax rates, there are changes in TDS rates, there are changes in GST rates, the provident fund rates have changed. So many things have changed in the last few months. And every week, there are new announcements and new challenges. In fact, my ERP on which I work, it is not updated as per the latest provident fund changes, let us say, which have recently been announced. And then, of course, the GST, TDS rates, those have been announced. So those are some areas where entrepreneurs have to understand. They have to keep themselves abreast and keep looking at what's ahead. So be confident. But don't be fearful of the world. But then, of course, be cautious. This is
Sure,
not the right time for capex. Let me
sure.
warn you. It is not the year for capex, capital expenditure. So even if one gets order, one should look around, see if someone else has a spare capacity, offload that work, give it on job work, get it done, consolidate your work on your core areas. Don't go for short-term businesses like, okay, I'll start trading in sanitizer just because today people are doing that. So there are thousands and lot of things. Last, there are some sectors which would see huge growth: the health sector, the food processing sector, the agriculture sector. Lot can be done in these areas. And therefore, do look at options. If I run engineering industries and I have been manufacturing, that is, say, traditional automobile components, it is time. Can I also make something for the health sector? Can I make beds for ICU? Can I make ventilators? Or there are millions of other things that health sector would need. So if I'm sure if entrepreneurs bring in their experience and resources with the skills and the innovation of the new generation, magic can happen in the second inning.
Sure, that sounds good. One big issue that entrepreneurs are worried about now is the problem of migrant labor. How real is this concern and how do you really deal with this?
It's a, I think it has been one of the biggest tragedies of these COVID times, and something that has been mishandled, I would say, by a lot of authorities. So I'm not blaming any one agency or any one government. I think it is a collective responsibility that society has to take, including entrepreneurs. Because I know that there was complete communication breakdown between the industry, the contractors, and the migrant workers. And sectors like construction, sectors like garment, these are the sectors that give huge employment to migrant laborers. And there are thousands of people, they work in one garment factory or at construction sites. There was complete breakdown in the communication, and no certainty was shown to them whether they would get business in some time, whether the salaries and wages would continue to be credited to them in time as the government wanted. So just because of this breakdown, uncertainty, no immediate thing in sight, with landlords demanding rent from these people, and then of course a lot of paranoia that that was around, a lot of rumor mongering for COVID and Corona. So we could all see millions of people walking on roads back to the homes, and the sad story that has ever since been. I'm sure it would not be an easy way back for them. Someone who's traveled all the way by foot or in trains that have taken such a long time in reaching destination, people who've been in moratoriums or stranded midway in various tents and relief camps. I'm sure they've seen a lot of pain, much more pain than you and I. And we would have to win back their confidence. I think this call is upon the industry also. Let us bring back their confidence. I'm very happy to inform you that in Haryana, and I speak right now, I'm in Faridabad, so Gurgaon Faridabad belt. Haryana has received 1 lakh requests from migrant workers presently in Bihar and Jharkhand who want to come back to Haryana. That is a plus sign. But the point is, how do you bring them back? Will they come back on trains? When they come back, how we will screen them for COVID, for Corona? Whether they would need to be quarantined for 7 or 14 days and then taken to businesses. Would landlords and people happily accept them back when they come? So point is, A, how to bring them back, B, how to provide quarantine facilities for them. And so that is a huge challenge. And let me tell you, till now, the labor was less, the work demand was also less. So no one in business circle felt pain in May. But let me tell you, by June end, when the markets would revive better, and I have a lot of news that in June, the automobile sector, especially the two-wheeler sector, is looking at producing at least 60 to 70% of what they did last year. And that sounds really, really great. But how will they achieve it without the labor in the supply chain? So how labor would come back, and then how they would be quarantined and taken back to work? I think these are gaps. So challenges are there. Challenges are likely to worsen by June end, as I say, and maybe by July. I hope that once again, when the trains start running, public transport starts running, and hopefully by then the COVID and its infection spread is in sight check. When maybe by then there is some herd immunity that gets developed in our nation. That is the time when I see some of these things coming back to normal.
Okay. At this point, we'll take a 5-second break again and come back to you with some questions from the audience.
RR Gifting for memorable brands. Call now.
Welcome back. The first question is from Mukul Vashish, Director, RR Solutions. With the absence of cohesive data on informal enterprises, which by some estimate makes up for more than 90% of small businesses in India, how do you think the government can identify, reach, and help these enterprises which have been facing shutdown at this time of crisis?
Okay. It is on demand of the MSME sector that Government of India had introduced a system called UAM, Udyog Aadhaar Memorandum.
Right.
It was an option given to MSMEs that they could just go online and link their Aadhaar card with the business, do self-declaration on their investment, and take a registration online for micro, small, or medium. This process takes less than 2 minutes, less than 2 minutes. And this is something which came in very handy. And millions of entrepreneurs in India, they've taken this registration. This registration in India is optional, which means that if someone wants to avail of the government benefit or the bank priority sector loan or some other subsidy, then one needs to register. So the scheme till date is optional, and rightly so. Second is that now that the definition has been widened, now the government has introduced two aspects. One is that they have increased the investment limit for the MSMEs. For micro, it has been enhanced from 25 lakh to 1 crore. For small, it has been enhanced from 25 and lakh to 5 crore to 5 crore and 10 crore. And for medium, it is now 10 crore to 20 crore. Government has also introduced a turnover criteria. For micro, businesses less than 5 crore are micro, businesses between 5 crore and 50 crore are small, and businesses between 50 to 100 crore would be medium. In this arena, I believe that this definition that has been proposed by the government at this stage is not favorable to the MSME sector. And let me tell you why. 2 years back, the same cabinet passed a resolution, a decision that small would be till 75 crore and medium would be till 250 crore. And 2 years later, now that the government is finally announcing in the COVID time, it is diluting its own previous decision and bringing down small from 75 crore to 50 crore and medium from 250 crore to 100 crore. And therefore, a lot of entrepreneurs who are deserving entrepreneurs, they would be missing out on the benefits that come to the MSME sector. And I really believe that this definition needs a relook by the government agencies, and government should have a relook. For example, someone in gems and jewelry sector, for such an enterprise, a 50 crore turnover, 100 crore turnover is hardly anything because of the very precious gems, diamonds, gold, raw materials that they use. So I believe government should have, they should revert to their previous definition of 75 crore and 250 crore. And of course, the enhancement in the investment limits that they have announced right now is really a welcome step. So my answer would be that it is an optional system. It is a 2-minute self-declaration system where someone can just go on the portal and self-declare. Of course, at the time, when the real situation comes, these details that an entrepreneur today files and self-declares, these details can be verified by looking at the balance sheet or through a CA certificate or something else. So government has made it easy initially for the initial registration, but then later on, of course, some of these things as required will be checked by the banks when they give loans, because that is where the real balance sheet will be coming, the audited balance sheet will be coming, and the actual investment and its relation to the turnover. And turnover, of course, is corroborated by the GST returns nowadays. So I believe very soon this entire system would become streamlined and would be very, very fair and transparent.
The next question is from Harnil Oza, founder and CEO of Hyperlink Infosystem. Do you have any ideas on how small businesses, especially financial businesses, can use technology as a differentiator?
Fintech companies are the flavor of the time. In fact, all the disadvantages of a very large bank, or should I say all the bureaucratic or red tapeism of a large bank, is done away with the minute when one talks about technology and finance together. And that is what fintech companies is. I personally know a lot of fintech companies that are doing amazing businesses at the microfinance level as well. Going up to lakhs, millions of borrowers with small loans and then doing their immediate background check through those apps now that the technology is integrated. In fact, the government also wanted a similar program and they launched a portal called psbloansin59minutes.com. psbloansin59minutes.com. And in fact, government also wants that all their traditional PSUs, the PSBs, the public sector banks, they should also act like fintech companies. And within 59 minutes, a loan can be processed and principally sanctioned. So I think integration of technology with finance is, of course, the future. For rest of the entrepreneurs, let me tell you, normally we identify technology only with IT. Let me also tell you that in manufacturing, technology has its base to a lot of automation that one can do in an enterprise. The Industry 4.0, which would now see the real surge with, on one hand, the shortage of manpower, shortage of migrant labor coming in. Maybe it is the technology and the automation in the automotive sector, that helps them to go ahead. And it's not only about manpower. Let me tell you, when we talk about a self-reliant Atmanirbhar India, and if I have to compete against China or Vietnam or Thailand or Korea and in the export market in Latin America or US, then I need to produce the same quality and with same cost effectiveness, because internationally the competition is very, very severe. And therefore, technology, even at that level, is very important. Lastly, of course, is when we integrate some services with technology, be it retail services, e-commerce, skilling, entirely new. The way we are talking today, in the interviewing, all the webinars that are happening. Normally, large conclaves would take place in hotels. Now it's all on webinars like this. So a lot of technology is going to give a huge boost to those who can integrate, be it manufacturing, services, e-commerce, or of course, hardcore technology. And that would make a huge difference. Finance, of course, I see all future financing happening only on the touch of an app.
We'll take one more question. Jayant Nair from Transact Incorporated. Would you suggest entrepreneurs invest in technology and automation at this point in time?
It is the only way out. In fact, it is not only the right time, it is the only tool that can make any business remain competitive and afloat. Otherwise, there would be no growth. So, of course, the time is right, and this is the only time that we have. And if we miss now, someone else would take a lead. So, therefore, to get in the second innings, if we are very lucky to survive and live a second inning, one of the best gifts in the life is to get a second chance. So take it as a gift, and technology and skills, these are the only two things that you can avail of in the second inning.
Sure. Thank you so much, Rajiv. It was a great, lively discussion. Thank you so much for sparing the time to be with us to do this webinar today. I definitely enjoyed it, and I hope everybody who is watching has benefited from this discussion.
Thank you so much. It was such a pleasure. Thanks for all your time.
Thank you, Rajiv.